What are some top ETF trading tips? Welcome to the Market Moves interview series, where we get an expert's opinion on ETF trends tied to stocks, bonds, gold, Bitcoin, and beyond. So hit that subscribe button and let's hear from Valerie Grimba, Director of ETF Strategy at RBC Capital Markets, who started by talking about how the markets are trading around this recent volatility. All right, welcome to this special edition of Market Moves, the interview series, and we're going to talk about the wide world of ETFs with somebody who knows that world very well, Valerie Grimba from RBC Capital Markets. Great to see you. Thanks very much for joining us.
Thank you for having me today.
Okay, let's just start with where the world of markets lands right now. We're looking at a very volatile period, at least just based on the daily headlines. What have you made, generally speaking, of the flows in the markets?
Yes, so the only key thing right now is uncertainty and unpredictability. And so we're trying to see how investors are positioning and how we think they should position in this kind of mixed, volatile environment where almost anything is on the table, and we're calling it a case of the macro maybes. Maybe this will happen, maybe that will happen, and investors have to position themselves to kind of be ready for all scenarios. So what we're seeing on the flow side is we're seeing a bit of a bifurcation. So there is definitely some defense being put on, but there's also some participation and a bit of FOMO rally still, and I still need to be participating because the velocity at which the market moved coming off of the Liberation Day lows was very swift. So we're just seeing kind of both sides of the teeter-totter being put to play in the flow space.
That participation part really gets my attention because this could turn out to be one of the more volatile decades we've seen in a long time. And yet, investors have steadily shown a commitment to being invested. What they're investing in, that changes. But there is still quite a large appetite for being connected to the world of investing, it feels like, despite the volatility.
Yes, and we've seen this buying the dip muscle memory. And so far, investors have been served very well buying the dip. If you look kind of over the last 5-6 years, if you step in and buy the dip, almost consistently, you have benefited from doing so. So again, I think any kind of market drawdowns, any kind of pullbacks, we kind of naturally see this wave of buying, and whether it's institutional or retail or advisor level, the ETF flows are steady and they're continuing despite any kind of market moves up or down.
Okay, speaking of muscle, I think the largest story of the year in terms of investing has been gold. I just can't remember a period in recent history where there was so much excitement around the world of bullion, and whether it's a hedge against inflation or geopolitical uncertainty or this theme of central banks buying, there have been all these catalysts for gold. But when you look at the trends, what do you see?
Yeah, it's fascinating. And listen, I started my career and we kind of had this big move of gold to 2000 and it was rah. And I actually went down to New York to kind of sell, Canada and its affiliation with a precious metal. And here we are 15 years later and it's kind of having its second coming, but it's probably its 100th coming in its millennia history of being a store of value. But yes, it's been an incredible move. Gold bullion's up 50% in the past year. Tremendous move. It's up 30% year to date. And Bitcoin's kind of flat, which we naturally kind of compare it to now. And we've seen flows follow. And so fund flows have been quite strong, over $1 billion in Canada to physical gold ETFs. And in the US as well, just massive inflows, which is kind of probably going hand in hand with the price move as well.
I'm glad you mentioned Bitcoin because it feels like with each passing year, which means another year worth of trading history to look at, this conversation on gold versus what some call digital gold gets more robust. I mean, it's never been as animated and active and debated as it is today. But you mentioned flows.
Yes.
So when it comes to the flows, are there any takeaways between, let's say, gold and Bitcoin?
Again, it's just a really fascinating time and I love it. Every morning I kind of come in and I look at my gold versus Bitcoin marathon is what I'm calling it. And then it's this real tight race and sometimes gold has the edge and then Bitcoin will have a really strong move and the flows will follow. But the reality is big inflows to both of the asset classes. And for different reasons, gold obviously safe haven, hedge against inflation, kind of a safety trade. Bitcoin again, is kind of a little bit more risk on, but we did see a recent period where it was uncorrelated to equities. And I think investors kind of bought into that theme as well. Like perhaps Bitcoin could have some of these tendencies that gold has.
All right, let's shift from digital currencies to fiat currencies, because the US dollar, the story around the greenback is a fascinating one. As soon as people say its time has come and gone, all of a sudden it feels like some of the safe haven interest bubbles back up. This does matter though, the direction of the US dollar, the relationship with the Canadian dollar, especially for investors who are buying ETFs that are hedged to the Canadian dollar as well. It's a big market in Canada, and you've been watching that trend.
Yes, absolutely. And it just speaks to the very interesting market times we're in right now. And the US dollar kind of rallied significantly over the last few years. So you would have been paid well to own unhedged exposure to US asset classes. But in March, we recently put out a report considering the US dollar's strong run that perhaps investors should consider putting on CAD-Hedged versions of their US exposures. And basically calling for a bit of a mean reversion. We kind of thought there'd be some weakness in the US dollar. We still do. The RBC foreign exchange strategist recently said we just see a continuation of a downward sloping relationship between the USD and CAD, which pretty much means that the US dollar is weakening and the Canadian dollar is strengthening. So in that kind of environment, you do want to own CAD-hedged exposures, because what happens if you're unhedged, the Canadian dollar strengthening against the US dollar will erode the value of the return from that US asset class. So to protect that, you should opt for the Canadian hedged version. And actually really fascinatingly is that we saw institutions put on CAD-hedged trades as well. And this is fascinating because these institutions run trillions of dollars. They have their own foreign exchange teams that manage massive portfolios of, kind of foreign exchange currency plays out there. But for whatever exposure they wanted to use this ETF, whether it's a liquidity sleeve to get in or out of quickly and express an idea, they were also choosing the CAD hedge to be embedded in that trade. And it's also just another reason why we love ETFs, because you can put that into the ETF itself and then the investor doesn't have to think about it.
Well, I'm glad you brought that up, because another trend we've seen over the years in ETFs, just as an example, like the rise of covered call ETFs. In the past, we would have talked about diversification and finding multiple income sources, and maybe if you wanted to balance your stock exposure with fixed income exposure. So when you look at some of the trends there for people looking at bonds or bond ETFs versus some of these other income-oriented ETFs, again, what are some of the trends you're seeing there?
Just massive adoption, and I think a shift in investor preferences. This category of ETFs has been wildly growing. We've seen AUM in the category go from about 10 billion to 30 billion over the last three and a half years.
That's the assets under management?
Yes, in covered call ETFs. And we've also seen the number of launches grow significantly. So last year in both Canada and the US, almost half of all new ETFs coming to market had an embedded option strategy. So what this is telling us is the market's really clamoring for this, and it's a nice segue from the CAD-Hedged, is because it's ETF as a vehicle is a democratization of sophisticated investing strategies. So before, you could access covered call within an ETF, a single ticker. Just buy it. You'd have to be able to trade options, implement your own covered call selling strategy, and there's just a lot of headache and friction that comes along with that. And now simply you can buy this in an ETF with a variety of different asset classes, sector exposures, factor exposures, and then put on the covered call overlay. And the other thing I'll touch on is just the changing in investor preference. I think 2022 is a big turning point. That was the year where both stocks and bonds were negative. They were positively correlated, so both of them went down and neither balanced each other out. And so there's this need for yield and diversification and some kind of protection. And to a certain extent, covered call ETFs provide another kind of tool in the tool belt. And I think investors are really growing to this idea.
I'm going to keep going on trends because there's a lot to talk about. It's been an amazing time, really,
Yes.
where people can look out 5 or 10 years on where we're going. They do that with technology for sure, but you can even do it with an area like uranium, just as an example, where speaking of technology, all the power demand from things like AI feeds into that story. But I think also this long-term story of an energy transition is feeding interest in that particular sector. Are you seeing a growing interest, just as an example, in that area too?
Absolutely, and we saw a big pop in the uranium space, both in the underlying uranium material rallied through $70, and then we saw the corresponding equities move strongly in the last kind of few months as well. We love the long-term outlook for uranium. There, again, is a lot to love. There is this kind of green energy transition. People, big picture thinkers are saying this is the way of the future. The spend or energy requirements of AI and data centers
They're
and
huge.
Everything that's going to come along with that is going to require a lot of energy. And we're prognosticating as well that uranium and nuclear energy can help meet the demands that are coming up, as you say, in a longer term time horizon.
All right, a lot of big trends and themes to watch there. Taxes is not my favorite subject, but it is one that investors have to pay attention to, especially with some of the developments in the US right now. There is in the works a plan that could potentially mean higher taxation tied to some of the things that investors like, including their dividends if they're invested in the US. We don't know how things are gonna play out at this point, but do you have to be mindful of some of those developments as well?
Absolutely. It's in the headlines right now. And I think this is actually where I look to camera and say, I'm not a tax expert, but it is definitely a consideration. And as Trump is kind of talking about his big, beautiful bill, under the surfaces, there could be some implications for foreign investors, which we are here in Canada if we're owning US assets. And so if there is any kind of changes to the Canadian-US tax treaty or withholding taxes and what they will go on a go-forward basis, then Canadians should really do their due diligence here. You should definitely understand what taxes you're paying, why you're paying them, and is there a preferential way to do this? Oftentimes, Canadian listed product can have different ways of considering the underlying assets and workarounds and things that can actually make it structurally beneficial to own a Canadian ETF versus if there's a complementary US counterpart.
All right, so just to build on that, it sounds like there's a certain simplicity then when it comes to people looking in their own backyard, investing here in Canada by comparison.
Yes, absolutely. And we almost always recommend considering a Canadian listed ETF over its US counterpart. And again, just you touched on it in your question, simplicity streamlines a lot of things. You don't need to open a US dollar account. You don't need to access a US dollar brokerage. And first and foremost, you don't have to mess around with the currency. So oftentimes people come to us and say, this ETF in the US is 5 basis points cheaper than the Canadian ETF, which holds the exact same underlying securities. Obviously, I should buy the US one because I save 5 basis points. What they don't realize is that to transact and buy that ETF, they are going to be charged 2% or 200 basis points just to move their Canadian dollars to US dollars to save 5 basis points. So it's a case of they're missing the forest for the trees sometimes when they're trying to do apples and apples comparison between a Canadian listed ETF and a US listed ETF that hold the exact same product.
All right, all good, helpful information there, Valerie. I did want to ask if you could give the audience one ETF related trading tip. Is there one that comes to mind?
So we've just spent a lot of time talking about the US and Canada, and there's been recently a few US holidays where the Canadian market is open, but the US market is closed. Do your research and understand if what you're trying to buy or sell, if the underlying market is accessible or open. So we had a few orders, people coming to us trying to transact on US securities while the US market is closed. Yes, we can transact here in Canada, and if you go and type in the ticker, we will be there as market makers posting a bid, posting an offer, but they will be quite wide, and we're accounting for the fact that the underlying underlying market is closed. And so as the July 4th holiday is coming up, unless you absolutely have to, do not trade US securities on a day when the US market is closed.
All right, some great holiday
Yes.
advice right there.
Summer
tips from the world of ETFs. RBC's Valerie Grimba, thank you so much.
Thank you.
All right, our thanks to Valerie, and thanks for watching. Got an ETF question? Let us know in the comments. And don't forget to subscribe so you don't miss the next video in our Market Moves interview series. See you next time.